people are assuming that this is a flight to quality. Now, there's a possibility, and it's a strong possibility, that I'm wrong and interest rates are going to go to zero. But if they don't, this has the potential for being a tremendous trade. Now, someone asked me a question before we came online about the gold market, about how it surprised some people. Well, folks, we've been talking about this for several weeks now. We've been watching the volume and we've been watching the open interest, just like we did in silver, back on April 21st when the whole world was buying it, and it was going to go to $100 and all this stuff, and this is normal stuff that happens. Those of you that don't have this book by Charles Mackey, it's a Popular Illusions and the Popular Delusions and the Madness of Crowds. The book was written in the 1800s, but it's still classic to this day, and it tells you just about all the things that have happened in the world and how they reverse. And there's another book from a guy by Harvard that I've mentioned, and I can't remember the name of it. It's called It's Different This Time, and it basically does a lot of the things that Mackey's book did and gives some of the statistics behind it, that these markets, they get overbought and oversold, and this is the only two reasons that markets go up, folks, are fear and greed. And fear is a greater emotion than greed because it has physical characteristics. You get the dilated pupils, diaphoresis, you're sweating, and, chalky white lips and white fingernails and stuff like that. And whereas greed gives you complacency and, lack of concern. And that's what we had in the market when we had silver at 49 and gold up around 1900. I'm not saying for sure that the 1900 is the top in gold, but it's very, very close because we've already broken the 1755 support. I mean, that was a very strong support. We should rally back, to test that old support one more time, but that was the 786. We've been down quite a few days in a row, so I would not be surprised if we had some type of a little bounce today. But basically these markets certainly look like they're heading to the downside. Now I'm going to be jumping back and forth a little bit because as you know, when the markets are as active as they were last night, I'm up watching quite a bit of it for looking at opportunities, and the whole thing started actually in Asia because the Hang Seng got hammered really badly. It was down, I believe, 5%. Actually, it was more than that. And it was really bad in China also. And then when it finally started in Europe, they all gapped down 1 or 2%. We're down 3 or 4% or more on the day. Now, we have broken through the critical level on August the 9th on the New York Stock Exchange Index. That index has already broken down below the level that we were looking at, and that is important. Now, we haven't done it quite yet in any of the other futures, but we've done this, and we're doing it with a big wide-ranging bar in the New York Stock Exchange Index. So that's telling us that, we are going down, hard, and since we made that ABCD from August the 1st, through August, almost September 6th. Actually, it came in on the 3rd, September 3rd. We completed that, perfect AB equals CD there, and that says that we're going to drop at least another 10 or 15% on the next move down. And the fact that we gap down today is very important because if that's the case, we could really have an acceleration to the downside. It doesn't take much from here. We're down over 400 points in the Dow, and we haven't seen a 700 down point since the flash crash, which was May of 2010. And I don't know if we're going to get it or not. All I feel strongly about is that we've broken out that low in the New York Stock Exchange. We have not done it yet in the Russell. We have not done it in the Dow, and we have not done it in the S&P, but we've done it in the major one, which is the NYSE, which is telling us. Not only that, but we are looking at markets around the world that we've been talking about, Europe and Asia, and they're very susceptible to the downside. We've been saying this for weeks and weeks that the things in Asia were not like they seemed. The charts were not telling us that the market was really robust and that they were going to be doing a lot of buying and stuff like that. The stock markets were not telling us that. So we have to keep that in mind, that it's a worldwide phenomenon. It's not just here. It didn't start here. This thing started in Europe and then moved to Asia, and we were the last ones to catch up with it. But we'll see. Now the commodities are starting to fall into place like we thought was going to happen, because this is what happened in 2008. The difference is it's a little more, what do you call it? I'm trying to think of the word, orderly than it was in 2008. In 2008, we had some real precipitous drops. This might be the start of a precipitous drop. I'm not sure, but the grain markets are acting, much as we expected. We've had some sell-offs because we had some major, Gartley patterns complete up there near the top, and butterfly pattern in corn and things like that. But if we can just keep our powder dry here for just a few more weeks, we might be able to get some tremendous buys here in these commodities, especially corn. Now I'm looking at corn, because that's one of the most favorite commodities that we have, and I'm going to post that into the den. And if you have any questions, you can call in 877-927-6648, and I'll be happy to answer your questions. We'll be back after this message.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. If you have any questions, you can call in 877-927-6648. And we'll spend a little time here talking about the corn market, and also wheat and beans and rice. But these markets are, they topped pretty much where they were supposed to a couple weeks ago at the expansion levels that we had. We had a major sell signal in the wheat market a few weeks ago that is, worked out. The pattern's working, really nicely to the downside. Corn is pulling back about another 40 or 50 cents in corn, and I think we're going to have a really good buying opportunity, sometime in probably in the middle of next month, another 2 weeks or so. We're in the middle of we're starting to start the harvesting period right now, so you'll get a little bit of harvesting pressure. But most of the things that we're having today are related to the fact that we are under these hedge funds that are in the wrong side of the market are really in a bad way. And that's what they're doing now, is they're liquidating these things, and you'll get some tremendous bounces and counter trend rallies along the way. But frankly, it looks like we are going to be going to the downside in some of the commodities, especially gold and silver. I believe have got a lot more to go. Now I want to switch over. I want to go back to wheat, but someone asked me a question about the gold market, about where it should stop and things like this. Well, we've always said that if we break much below 1755, we've set up a potential for 1555, and that's a possibility. Now the main pattern that we based this on, of course, was that gold bug index, and then we also had the XAU was making lower tops. So this tells us that a few weeks ago that was a possibility, in early September when this was happening, that this is not the time you want to be long and you want to get short. So if you are short that HUI, I would suggest you hold on to it. And I think we've got a chance to probably take out the June lows without too much trouble. That's only $100 away in that index, which is just 20%, and 20% more in gold would take us right down to that level. We're looking at around 1755, if we get to that level in the gold market. So we want to keep a real close eye on that. The other one that we have been talking about, and it made a beautiful pattern a few weeks ago, was the Gartley pattern that we had in the copper. And copper is really being focused on with a lot of people today. And the main thing that they're realizing is that once that thing broke the 385 level per pound, it really was ready to collapse. And that did that 5 days ago, and that was at the 385 level. It tested it twice. Once in May at the 786. It tested the 786 again. Back in August, and then once it broke that, it's broken to the downside now. And during that time, from August 9th, the stocks rallied a little bit into that, but copper would just barely made the 618 retracement. It made a perfect Gartley there, just as the stocks were making the high. That was back right after the holiday, right into the holiday of September 9th, which was Labor Day. And since that time, we broke it. Now, longer term, we're coming into some pretty good support. So like Steve said on his program, there's a possibility here that when we come in next week, we have the P-index date, coming in on the 26th. I believe we have one on 20, and the 27th we have the new moon, And then the next day, I believe we have perigee, where the Earth is as close to the moon that it gets. So we should have a really strong trending day. Well, I didn't mean that. I mean there should be a really strong cycle date occurring on the next Tuesday or Wednesday, because that's when this is where this culmination of all this could happen, of this thing. And then we have a little bit more rally, and then I believe we're going to be down farther into October. The reason why I believe that, folks, is the way that this market started down. And I'm not just talking about our market. I'm talking about the markets in Asia. I'm talking about the markets in Europe and just about anywhere in the world. India was down 4.5% last night. So the markets are getting hit. And when you get slapped like this, you don't recover, as quickly as you could. That's what a boxer does. He has to learn to take the punches. And the market has to learn to take the punches, too. And when they get slapped around a little bit, people are reluctant to come back into the market. So this is why these rallies, when they occur, are very fast and they don't last very long. 2 or 3 days is usually, the most that you can have. But, you still have to be ready, because when they have these counter-trend rallies, they could be really... really crazy. We pay a few bills here, 877-927-6648. If you have any questions, and I'll be back in a minute.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. And if you have any questions, 877-927-6648. The next commodity we're going to take a look at today is the wheat market. It's about as technically perfect as it can be. It's just as perfect, if not equally so, as to the corn chart that we put up earlier. Remember now, folks, in the world crops, the corn crop is the largest crop in the world. I was really surprised to learn that because I always thought that rice was, but rice is actually number 3. We have corn first, which is the largest food crop of the world, followed by wheat, and then by rice, and then and then soybeans, and of course they crush that into meal and oil. But we've had a tremendous run in these commodities, and now they're selling off quite a bit. But the wheat chart is such a beautiful picture if you like technical analysis, because you have a 3-drive to a bottom pattern that formed in last June at $4 a bushel. Then it rallied $20,000 a contract, and it's made a beautiful head and shoulders pattern, and it's made 2 Gartleys along the way, and it's just really a spectacular chart to look at. So if you have time to come into Tiger TV and take a look at this chart, it is really a beautiful thing to see how the technical part of the market really works. Now remember that this is all it is. It's a sum total of all the buying and selling that has nothing to do with the fundamentals of what's going on. It's just who's buying and who's selling, and we don't know who those people are because you don't know who has the other side of the trade, so it really doesn't make any difference. It's just the psychology that's involved in these patterns, and they work because they repeat over and over again, and they are predictable to some degree. They don't work all the time, but they certainly can, work some of the time, and that's what you're looking for, is the probability in your favor. Now, what's interesting about the wheat today is that it closed at the exact 618 of the low we made in late June, and since that time, the market had a pretty good rally, made a beautiful ABCD pattern into that Labor Day weekend, and now we've sold off well over $1.30 a bushel, which is $7,500 coming off that Gartley sell signal. But today we gapped down below the 618 retracement, which was yesterday's low. And as soon as it gapped down below that this morning, and that was more than 20 cents ago, you had to really be have to have your eyeballs examined to be long the wheat if it did that, because it's really, once it goes below the 618, the next level is going to be the 786, and if that fails, it's going to be the 127. So this is what you're trying to do, is to control your risk. And so this is, a perfect example, technically, of why this chart is so important. It's got so much information on it, that tells you the best way of, looking at the market as, trying to define the risk that you're dealing with. And that's the main thing that we're trying to do here, is to quantify the risk. I'm going to cover the rice in just a few minutes, but I'm going to end the show today, and we want to go over the bonds because I don't know when the top is going to come, but I know that it's clear. I don't know for sure, but it's very clear that the pattern is coming up to the 150 area. I don't know where the TBT will be at that time, but we'll probably be looking at the TBT, and we'll also be looking at a put in the Treasury bonds, because the puts are going to be a lot cheaper, of course a lot cheaper than the calls, but they'll be as cheap as they can get if we can get these up at 150, and we'll be able to watch this a little closer. But I want to follow up with that when we finally get to the last segment of the show, because I think it's important enough that once we see this, that we're going to have a really good place to have to come in and get long the puts in the Treasury bonds. It's one of the few times that I do puts, but I do have some people that are very good with puts that I work with. I've got to pay some bills here for Tom, and 877-927-6648, and I'll be back in just a bit.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we have a call from John in Philadelphia. Are you there, John?
Larry, I am here. How are you?
I'm good, thanks. What can I do for you today?
Larry, I'd like to ask if you could look and give me your read on crude oil, specifically on crude, the West Texas Intermediate crude contract, peaked 115. It's been coming down. My question is specifically this. Does your work indicate that crude oil might be completing a decline pattern soon, or alternatively, is this decline only midway through, if you will, something along those lines?
Okay, John, what on the daily chart, we made the big AB equals CD from May through August. That was when it went from 115 down to 75.
Yes.
And then on August the 9th, when the rest of the world was bottoming, the crude oil took off, and then it rallied $15 a barrel right up to the exact 618 of the sea leg. And so if you measure that down, that's going to take us down to about $60 a barrel if we can get below $75 a barrel. And, we've had, dropped 5% in one day, so it's possible of doing that. I don't think we're going to see new highs above $90 a barrel in crude for quite some time, so I think we're going to be, going a lot lower. If we could change the direction for just a second and we look at the other part of the the component of crude oil, which is gasoline, for our cars that we all use, it's had a beautiful pattern where we rallied from May, down into June, and then we rallied up exactly to the 61% retracement at $3.18 a gallon. And now we're making a beautiful AB equals CD leg down, and that says we've got another at least 10%. So another 10% in crude oil would be at least another, $8 a barrel, and that would take us, below or close to that 75. That 75 is a really important number in crude oil. To me, that's the same number that would be equated to the number that we made in the stock market in the S&P at 1080. So that's what I see. I think it's got a chance to break that out, and mainly because we're having pretty a lot of margin liquidation for the hedge funds. Now that'll stop in a few days, of course, but it's at major support now. I mean, we broke through the 618 in the last couple of weeks, so there's no reason to buy it here. You just have to wait a little bit.
Thanks so much for bringing up that gasoline. I had forgotten to check that in recent days. I'm here in the den looking at that pattern, and I see exactly what you're saying. So terrific. Thanks so much.
You're welcome. And all we're doing here, during the commodity hours, and we realize that, we have so many people, in the den and listening to us that don't actually do commodities, but you learn a little bit, from when you're watching these things, because we all use these things. We might not know that they're commodities and that they're tradable, but frankly, we use a lot of these things every day, especially gasoline and corn and wheat and all the other things that we use. And keeping an idea of what these prices are is really good. I mean, there's not as many future traders by a small fraction compared to what there are in the, stock markets and in the Forex markets. But, it's good to understand some of this stuff. And if you do decide to trade futures, they're a wonderful thing to trade because you get good leverage and the liquidity is very good. And the exchanges, they have so many. When I first started trading, futures markets, I think we had about 30 things to trade. That was back in the mid-'60s. And now I think with all the options and stuff, there are over 200,000 different combinations of things you could possibly trade on all the different exchanges with the different permits.
The world has certainly changed. There's no doubt about that.
That's for sure. And I hope to see you in a couple of weeks. I'll call you when I get to Philadelphia, and we'll have lunch this time.
We will. We won't let it
maybe
pass.
I'll even have my little grandson with us. He's 4 months old now, so he's getting old enough to push him around in the trailer in the little stroller. So they'll let me have him for 15 or 20 minutes at a time.
Great. I'll look forward to it, Larry. Thanks so much.
Okay. Thanks for calling in, John.
Sure thing.
You bet. We were. When asked before John called in, we were talking about the grains, the wheat and the rice and the soybeans and things like that. They're having the same type of sell-offs. We're into the harvesting season that ends around November 1st, so you do get a little bit of that, and you're getting combination of hedge fund liquidation here, and that's really what you're really looking at. The markets overall, folks, we've been harping on this little soapbox for a long time, but they've been looking so bad technically, and it's really showing. The rest of the world now is starting to see, gee, maybe this is not really as bullish a picture as we see happening, and now the rest of the world is starting to see this. There's a word for that, or a phrase that was coined by Paul Samuelson, who's a great economist and Nobel Prize winner in economics, and he said that it's a change in the continuity of thought. In other words, you have everybody thinking one way, and then all of a sudden you have them turning the other way. And that's what we have going on in Treasury bonds now, folks. I know it's hard for us to, to say, my God, how could you even possibly think about, selling Treasury bonds here? Well, folks, I don't understand the fundamentals behind any of this stuff. All I do is I look at these charts. These charts have been my guiding light here for a long time, and the light is pretty bright. I mean, a lot of people are looking at this. We've got MIT looking at it. You've got, all kinds of people are even beginning to look at astrology quite a bit, and that in itself is an amazing thing, that people are realizing that it's nothing more than numbers and that these cycles are related to some of this stuff. How they work exactly, we don't know, but we don't need to know exactly in order to to make a move here. So going back to the bond chart that I posted earlier in the den, and this goes back from 1981 to 2000. The strategy that I'm getting ready to try, and I haven't done it yet, and we're not ready yet, but we're getting close. We want to wait till we see about 149 to 150 in the Treasury bond. Now that's 4 points away, folks. It's up 2 full basis points today. So that means in 2 days it could be easily at the 149. Okay, so that's not the time to do it. The time to do it is probably going to be if we get capitulation in this market down into these P index states that we have early on Tuesday, Wednesday of next week. If we get a panic sell-off in stocks, and I'm not saying crash type, I'm just saying panic sell-off, then this will be the time to take a look at the TPT and also the puts in the bonds, and we'll be looking at March, because we don't have to go out very far. We're going to take a little break here, 877-927-6648, and I'll try to explain a little bit more about the put strategy that I'm working on.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, Everbank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. Everbank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind.
David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Hi, folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, folks, we're back. And someone asked for my ideas on silver, support in silver, and the long-term 786 and 1.618 expansions going back through the May low comes in at around $35 an ounce in silver. Below 35, you can turn the lights out in that market because it will really be a pretty big place to where you're going to have a tremendous move, I think, to the downside. So we'll have to keep an eye on that. Now, I'm going to get back to the bonds because this is something that we want to really keep in mind. We're looking for a price level at around 149 to 150 in the December bonds. So we want to keep an eye on that. Now, we're still a good 4 or 5 points away from that level. And what I'm watching is for the 141 March put is what I'm looking at. And that 141 March put is selling for roughly, I think it's $1,500. I'll have to double check because I haven't traded a put in that darn thing for a long time. I'll have to go back and look. But you're still able to to trade it like a regular future. So we'll take a look at that. But I believe it's around pretty close to $2,000, $1,500 to $2,000. That means you're going to control $100,000 of Treasury bonds for $2,000, and you'll be able to control it for several months. And your downside is the total premium that you put up. But what we're going to do is we're probably only going to risk 1/2 of that premium. The second thing that we can do is we can use the TBT. Now, the problem with the TBT is that you don't have the same control because you have unlimited risk when you're trading the TBT. But when we get in it, I think we're going to be able to limit that risk because at the time that we're going to get in it, the whole world is going to be going to the other side of that. And I think that's the thing that we'll be able to at least focus on correctly. Remember when we were talking about the gold topping back at 1925, one of the things we mentioned was the GLD, the fact that that was the largest ETF and the whole world was on that one side of the market. And, this is the type of thing that you look for when you're trying to get into a risk-free or a very small risk environment. People think that what we do here is very risky. In fact, it is really not, because what we're trying to do is to control our risk. That's the only thing that we're trying to do here. We have an idea that these patterns work more than they fail. We know that, and we know that the profit on the trade that we do is usually greater than the loss that we take. What we have to do is to make sure our probabilities, line up with our strategy. And so our strategy, it has to be based on how much money we're going to risk. So what we're going to do is we're going to give a potential put option. in the Treasury bond for March, and then we're also going to do the TBT, and then we'll also be doing the futures. For those of you that are active futures trader, the futures are the best thing to trade because you don't have to give up any premium like you do in the puts and calls. And so this is these are the things that we're going to have to go through when we do a strategy like this, because this is something that, if it works, it might take a little time to get it moving, but it still could be, still be working. And then the other side of the coin is that it's totally wrong and interest rates are going to go to zero, and that's not a good thing because that means money's not going to be around for anything, and that's going to be a really, really not a very good thing overall. Remember, this is a debt liquidation cycle, folks. It has nothing to do. I think Bernanke has made he studied the 29 crash, and that was his thesis and everything. But I think, frankly, he's looking at the wrong thing. He should be looking at 1837, not 1930s. It's hard to believe that this show is ending already, but thanks for listening, and I hope that we see you guys Monday, and we're going to have one heck of a week coming in next week, so be sure to get your rest.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 20